have a quick look on the markets, though we are definitely off the day's highest point, but nevertheless, Nifty 50 is holding on to the gains of 128 points right now, while the Bank Nifty is also trying to find some ground there, but it's the broader markets that are participating very well. It's more than 1600 counters on the NSE that are showing the advances versus a decline of 777 stocks. But all in all, indeed, the number of stocks that are showing declines in the broader markets, they have increased, but the majority still continues to be in charge of the bulls right there. But what is where the Indian markets are headed, as well as what are the near-term concerns that you should be looking at? Let's understand all of those with our special guest for today. And with this, let me welcome Mr. Rajesh Bhatia, who is the CIO of ITI Mutual Fund. Hi Rajesh, this is Shrishti on the other side. Very good afternoon, and first of all, thank you so much for your time. And the one question that everybody wants to have an answer for is how much should one be having the confidence that it's the kind of uptick that we are seeing on Nifty 50 today, the kind of gains that we are seeing today. How much is that giving you the confidence that yes, we are over the global sell-off, or do you believe that in the near term there are some more risks that could be there in the room?
Well, look at it this way. Among the strongest markets in the world today has been the Indian market. It has hardly fallen. I think we have fallen probably 3 or 4% from the top, whereas the world has been far more volatile. So it really is a very, very strong market. So what you're really witnessing is a correction in the Indian bull market. So while there are technical factors like the yen carry trade, or the lack of confidence in the AI theme, with investments not, the returns not commensurate with the investments that are being made in AI, etc. Those are probably technical issues related to the market, which is triggering some foreign selling. But as far as the Indian markets are concerned, it's an extremely strong market, minus the fact that the US could be going into a slowdown. And it's difficult to kind of gauge the extent of the slowdown as yet, but it is certainly going into a slowdown, and which is going to trigger interest rate cuts from the Federal Reserve. So minus that concern, which will probably impact global facing sectors, India is in a bull market. Stay invested in India.
All right, India is a bull market. Stay invested in India, but where to stay invested, Rajesh? Because the kind of fall, not in India, but actually globally, that's a bit scary indeed, because a couple of these global markets have actually turned flattish for the year-to-date return. But when you say that India is poised for the growth, and it's the kind of a technical sell-off that we are witnessing right now, where are you finding some opportunities in this recent fall? How should one participate?
So look at the domestic sectors. Like I pointed out, I think if there is a slowdown in the US, now US is probably a quarter of the world GDP. And, definitely it is the only developed market which is really growing at any predictable pace. China, Europe, Japan, etc. have challenges in the developed world. So if that market also slows down, there could be a global recession, so as to say, or at least a global slowdown, which will be in that global facing sectors, namely commodities or exporters, etc., could definitely suffer. And therefore, India, which is entirely, the bull market is premised on the fact that Indian domestic consumption stroke capital expenditure, and more so capital expenditure, has been kind of on a very, very strong trajectory. So play the domestic stories, whether it is private banks, insurance companies, telecom, capital expenditure plays. Those are type of kind of stories which will continue to do well in the short, medium, and long term.
All right, those are the domestic stories that one should look at. But Rajesh, any pockets that where do you feel that investors should be wary of, and they should not get their hands into any sector right now?
So like I pointed out, I think the concerns on the US economy will mean global slowdown. So I think things like global commodities, etc., are something that you need to certainly be wary of. There's also the IT sector. Uh, the premise for the IT sector rally in India, at least, has been that interest rates, if they are being cut in the United States, then that could mean bullish times for Indian companies. We will have to just take cognizance of the fact that in the shorter term, probably that could mean if recessionary conditions in the US prevail, then the mindset of the corporate spenders on IT in America would mean that they would want to conserve some of their capital expenditure on IT, which could have an impact on IT services revenues as well. So I would say that apart from commodities, I would say IT is also something that you would probably want to look at and be a little cautious on. But there's ample room to play on the domestic side. It's a very strong domestic market. There's lots of opportunities there.
Also, Rajesh, wanted your take on the financials then, because though Nifty 50 is not that much cooled off from its highest point, but it's the financials that are seen to be taking a little bit of backseat. Do you believe that in the next bull run, the financials could participate in the full force, or there are some things that one should look at right now in the financial space specifically?
So if if you're referring to banks, particularly, let's say now private banks, I wouldn't say it would rally with full force, but uh, because if you look at the private banks, we're probably at the peak of NIM margins, net interest margins, and best of credit costs. So things can only deteriorate, but probably at a marginal pace from here. And interest rates are going to be cut, which is definitely going to impact their asset side of the book in terms of they yielding lower returns than what they are at this moment. Having said that, I think the attractiveness of the private sector banks in terms of valuation and the fact that they've been underperformers puts them in a very good stead. As far as life insurance and general insurance companies are concerned, again, they have been probably ranked underperformers, particularly some of the larger life insurance companies. I would say that they don't have credit cost challenges, etc., and they are very consolidated as a business. And a lot of regulatory concerns that were an overhang on life insurance companies are probably behind them. So my sense is that's also an attractive space as far as financials are concerned.
All right, Rajesh, we look forward to that space as well. But with this, we'll let you go on that. Thank you so much for joining us today on ET Now.